And I'm going to call this is how we play. Now, I teach my traders that whenever you spot, they are not allowed to allow a bull elephant bar to go by without buying into it. They don't buy the next bar. They buy into the bull elephant bar. But now, we talked about that earlier. I want them to never miss a bottoming tail bar. Every bottoming tail bar that forms in a certain location, they must buy into that bar before the bar closes. So if they're a micro trader and they're trading 5-minute chart, and there's a 5-minute bottoming tail forming, they must buy into it the last few seconds of the 5-minute period. So 4 minutes and 45 seconds, let's call it. Why are you going to buy toward the end of the bar's formation? Just to make sure it stays a bottoming tail, right? So they buy into the bar. If they go all in, their stop is under that bar. They buy into the bottoming tail bar toward the end of the bar's formation with a stop under the bar if they go all in. If it's a partial buy, they don't put a stop in until their last buy. So some traders break up their buys into 4. So they say, okay, Oliver, here's a bull elephant bar. Boom, I buy a quarter. Here's a bottoming tail bar, I buy another quarter. Here's another bottoming tail bar, I buy the third quarter. And here's another bull elephant bar. That's my last buy, stop under the bull elephant bar. They use their last buy as the stop. Does that make sense? So it's never, if your stop is always placed when you are no longer going to commit new money to the play. Now you need a stop. All right? Now, same thing on the sell side. We sell into the bar with a stop here if we're going to short. We sell into the topping tail bar before it finishes with a stop above the high. We sell into the topping tail bar with a stop above the high. If the stop, of course, if we're not going to short anymore. Now, let's go over the definition and then kick off right into the strategy. There are 2 types of bottoming tail bars. Now let's focus on the bottoming ones. There are 2 types. There are regular tails and then there are kamikazes. The regular tail bar, bottoming tail bar, occurs at or near the items or the stock's 20-period moving average. The kamikaze forms deep below the 20-period moving average with a lot of space between the top of the topping tail and the 20-period moving average. Let's look at this. Here's a bottoming tail bar. Stock opens at 18, drops all the way almost to below 17, rallies all the way back. But there's no space between the top of the topping tail and this 20-period moving average. So that's a regular bottoming tail bar. Do we buy regulars? Yes. But kamikazes, we risk it all. My traders are taught that with regular bottoming tails, buy them. But with kamikazes, you risk everything in your account. Everything. In fact, borrow money. Knock on your neighbor's door. All right? There are moments in time where you risk it all. It's smart to. In fact, there are moments in time if you don't risk it all, it's dumb. Because why would you give up this? The odds are so high. You know, poker players, the good ones, know when to put everything in. All right? So, here as we're getting closer, it's not quite a kamikaze, but it's not quite a regular. The regular is sort of at the 20. This has a little bit of space, bottoming tail bar under the 20, a little bit of space between. So I'm going to buy that one a little more aggressively than I would buy this one. All right? And then you have the kamikaze. The kamikaze is deep below the 20-period moving average. There's a lot of space between the head of the 20 and the 20. Look at all that air. You see, stocks can't stay disconnected with the 20 for long. They can get disconnected. They can't stay disconnected. They snap back. The same way they can't get way above without eventually snapping back. It's the rubber band theory. They get away, but they come back. They get away, but they come back. So I teach my traders to watch a stock, and if it ever gets a certain deviation away from that 20, but it has to get there at a certain angle. It can't drift gradually away. It's got to almost collapse away. That is an unsustainable move. This is an unsustainable collapse. But see, gradual, little, tiny, take your time declines can go on forever. It's the ones that fall off a cliff that cannot go on forever. That's your opportunity. The cliff fall. It's scary. It's scary to buy into that bottoming tail. But wait a minute, is it really? Yes, Oliver, because you're telling me to risk everything I own on it. Yes, I am telling you. But I'm telling you to risk everything you own with a stop where? Under this bar's low. So what's really your risk? From this entry price to that piece? That's your risk. You can manage that. If you're disciplined, all right, you can manage that. And then I tell them, hold on for dear life. Do not be itchy to sell quickly in a kamikaze. If you get itchy, sell a third. Let this baby work its way out, because we have found that kamikazes are the absolute low. Do you know what the statistic is based on my back studies? Years and years, like 96%. 96% chance the kamikaze bottoming tail is the final low. But the final low for when, Oliver? Forever. Do you believe that? Forever? No, you shouldn't. But in reality, it's almost forever. All right? So I teach my traders, we have a number of things like the kamikaze that we simply wait for, and I give them the money to put it all in. And if it's lost, it's my loss, right? But then we share the gain. I just can't find every kamikaze out there. All right? Now I've got 9 different automated systems that trade the market 24 hours. I have that. But automated systems are great. They don't ask. Like, I've got a top trader that wants to go on vacation. Are you kidding me? Why? Why would you want to do that? Can you trade there? All right? I don't get that. So my machines don't ask for vacation. I understand this. All right? But what's good about them is also bad about them. You see, every now and then, you should break the rules. But a machine doesn't know that. You know what? I don't know what it is. My gut's not feeling this. I'm getting out. My God, I'm glad I did that. That's human intuition. See, machines don't have human intuition. All right? So there's always a place for the human mind that actually creates the machine. It's obviously superior. All right? As long as we can control its negative parts. Now, I'm running out of time, but we're going to tell the other guy just to go home, right? The guy that follows me? All right. All right, bottoming tail bar way below the 20-period moving average. There's your low. You enter toward the end of that bar's formation. You buy that bar. You don't wait for the next day or the next bar. You just wait for it just toward the end of it, just to make sure it doesn't fall apart on you. All right? Stop under the low. Let this baby go. Don't be quick with the kamikazes. Do not be quick. This works whether you're a micro trader, you trade 2-minute charts, 5-minute charts, 15-minute charts, kamikazes work. You trade daily charts, weekly charts, kamikazes work. Even better, they're bigger moves, right? Somewhat of a kamikaze, not quite a kamikaze, because a kamikaze collapses and falls out of the bed, gets way below the 20, then puts in your bottoming tail. But we've still got some space. I'll take that. I won't buy it as aggressively as a kamikaze, but there I go. Now, here we get a decent distance below. Still not quite a kamikaze because you don't have the collapse, but you still have some space. I'll buy that with a stop under the low. Let's see what happens. You can use this one tactic. You can. I mean, I wouldn't want you to if I put you under my training, because there's so many more money-making opportunities that you put on top of this. But this one thing, if you just sat around if you have your favorite 5 stocks, you just sat around and waited for kamikazes, I guarantee you'd be buying like Warren Buffett. Because the kamikaze is, you've got to be buying value. It's after a collapse. If you pick quality to look, all right, I'm waiting for quality to collapse. All right? The bottoming tail bar means that the last of the Mohicans were wiped out, and then now it's coming off the low very aggressively. Somebody must be stepping up to the plate, all right, after this collapse. And it's probably somebody with big money or a few people with big money. Kamikaze, deep below the 20-period moving average. There's your run. All right? Can you help me find kamikazes. That's all I'm looking for. That's all I ask. I will give you 85. I'll start you off getting 85% of the money. And then as you progress, you go up to 95% of the money. I'm willing to take a little bit, but I need thousands of traders to do that, which is why I have 4,000 traders. That's why I can take a smaller piece and give you the lion's share. But I just want people who are smart enough to be able to put a few tactics like this on your belt. Let me give you money, and then you just hit the button. It should be as simple as that. I know it's not. It's simple but not easy. You know, I tell this story all the time. Like I have 6 kids. I have like an army. But my 5-year-old's twin girls. All right, they just started school. And one year I think there were 3, and they love Nemo. So we're walking through this town carnival, and they see a big giant Nemo, and they start crying, and I'm like, oh my goodness, all right. So I walk up to the guy at the booth at the carnival and say, okay, what does it take to get this big giant orange fish up here? He says, all you got to do is put one of these balls in that basket. And I'm like, for that basket right there? It was like right there. That's it, sir. Do I have to put all 3 of the balls in? No, just one of the 3 of the balls in the basket. But that one right there, not that one over there. This one? This is a 6, right? You want one and you want one, right? So how much for the balls? $5. For each ball? No, sir. $5 for 3 tries. Great. $5. $455 later, I'm walking out now with 2-1, Nemo. All right?